two lines, one chart, and that chart is Tesla. Let's have a look. When we look at the chart of Tesla at the moment, before we look at the actual chart, I will tell you that from a trend following perspective, meaning from a trend perspective, Tesla really is in no man's land. It's not in a bullish trend. It's not in a bearish trend. It's currently in this black background color, which basically means it's in a neutral trend. It's choppy. It's a chop zone. No real odds here, at least not in the near term just yet, in any direction, in any one direction. So that's important. Now, what I can tell you though, is that Tesla, since the late last year, so let's call it December, late second half of December of last year, has been making both a series of lower highs, yet from the April lows, a series of higher lows. And that gives us a very simple chart, maybe an overly simple chart that looks exactly like this. Now, what can we gather from a chart like this? Well, again, we can gather that we have a bunch of lower highs and higher lows in a shorter time frame. And what's happening is that the trading range is getting shorter, right? Tighter, I should say. And at some point, there will be a move that presumably will go either to the upside or, again, being open-minded, this is 2025, it's a year of the trader, or to the downside. We don't know. What I can also show you here is that we know that Tesla over the past few weeks, specifically since late May, has been trading in a somewhat wild but choppy and defined trading range that looks like this. So what we're noticing right now is that this stock there's a lot of tug of war, right? The bulls are trying something, the bears are trying something, no one's winning. It's just chopping people up. A lot of people with harsh opinions, bullish or bearish, are getting torn and probably losing money, by being one or the other direction too much exposed. So what I'm really waiting for is for this trading range to resolve itself. Ideally, we see at the very least a break either on a daily closing basis below 275. That would be saying that maybe this range is going to resolve itself to the downside, at least for some points, or the stock breaks above about 365, which would, if again, it has to do this with momentum, so we actually use our momentum indicator for that. And if it were to break above 365, we might get a better opportunity to see the stock move back higher. But here, this is a low conviction zone, a low probability zone. It's the chop zone, as we call it. And you can see, again, the stock is narrowing within this range. Stay out is what I'm going to do until we either break below 274 on the downside or above about 365 on the upside. Hope it helps. See you in the next video. If this video helped you, please make sure you subscribe to the channel, you give us a thumbs up like, and if you want to see this approach in action, you will want to join us in our Set the Market morning call, which happens at 9 o'clock Eastern Time, Monday through Thursday. Make sure you join us for that in the link down below. Again, subscribe to the channel. I'll see you in the next video.